A good day and welcome. In this presentation I will introduce you to my band break system, a trading expert available in my Band Indicators DVD publication. For more information about the DVD and BBS, go to stoccata.org. The BBS program and indicators code is included for Metastock, MetaTrader 4 and NinjaTrader 7. Please read this liability notice and the risk disclosure. Metastock charts and used formula language is courtesy of Equis International. The clip art used is courtesy of freestockphotos.biz. The BBS Band Break System is a trend following system. It is based on the idea that for trading stocks you need a minimum reversal amount before you can assume a change in trend. For a BBS buying signal, this means the upper side of the band needs to be crossed by a closing price. Once in the trade, there must be sufficient room for short-term price reactions. You will stay in the trade as long as the closing price remains above the low of the BBS band. That leaves enough margin for short-term price reactions. An open long trade is closed when the lower band of BBS is broken by the closing price. In general, trading long or short with the trend following system will be profitable as long as price makes regular medium to longer term up or down moves. Trading the short-term downward corrections in an up move is not profitable. That is the reason why BBS will go for short trades during longer-term downtrends only. To enter a short trade with BBS, we need a closing price below the lower BBS band, and the closing price must be below a defined longer-term moving average. Backtesting proves that only that way short trades will contribute to a higher profit. BBS can be used in different time frames. First, we have to create a candle or bar chart, plotting the BBS indicator over the price bars, of course using the same scale reference as the price bars. The green line is the upper side of the trading band and the red line is the lower side of the trading band. The blue line is a standard 165 period simple moving average used for short trades only. To trade long, price moves in a downtrend, but beginning of March in this chart it breaks above the upper BBS band with a closing price. This is a BBS buying signal to open a long position. In a full automatic trade setup, this trade will be closed when price falls through the lower band with a closing price. Because you always need to protect your investment with a stop loss, the trade may also be closed reaching the stop loss price setting. A stop loss can be set based on technical analysis techniques, but in case of full automatic trading it is better to decide on the best average stop loss based on backtest results over a longer period of time. BBS uses 4 settings: a reference average for the bands with a default of 13, a look back reference period looking at price volatility with a default of 8, a band's deviation factor from the reference average with a default of 0.9, and finally a long-term moving average set at a default of 165. This long-term average will be used as an extra filter for opening short trades only. Trading short. Price moves in an uptrend, but half of September it falls below the lower BBS band with the closing price, while at the same time the closing price is moving below the long-term average. This is a BBS buying signal for opening a short position. In a full automatic trade setup, this trade will be closed when price rises above the upper band with a closing price. Because you always have to protect your investment with a stop loss, the trade may be closed reaching the stop loss level as well. This is basically all you need for trading the BBS system automatically. BBS backtest results. Trading daily bars. BBS will mainly profit from trading long positions, but as we have mentioned already, it will also trade short during a longer term downtrend. To be able to compare results, I'm using the same fixed selection of 38 stocks that I used in many cases before, with a fixed start and end date from January 2005 till the beginning of July 2011, a period of about 6.5 years. Let's have a look at the broader market with the evolution of the S&P 500 index during that test period. A buy and hold strategy of the 500 stocks in the S&P 500 would have made only a very small profit in the order of 12%. Using the same period and using automatic trading based on BBS with 38 selected stocks gives a total profit of 350% with an average of 44 trades per stock. There is a very nice distribution of the 350% profit with average 44 trades per stock and with only one stock creating a loss. That represents an average compounded interest of 18% per year. That is certainly a whole lot better than the buy and hold strategy profit of the S&P 500 index. Not bad at all. With good money management, as applied with BBS, using a starting capital per stock and no profit or loss sharing between stocks, an eventual total loss of one stock only represents a loss of 2.6% of the total portfolio. Risk is mainly managed with the use of a calculated stop loss and the inherent to the BBS system itself. If you are willing to take more risk, you could make use of a margin account. So let's repeat the same test with a 50% or 2-to-1 margin. What is the result? The total profit is 732%, more than double the profit not using a margin. Be careful. Here you can lose more than the basic capital attributed to a single stock. It should be clear that BBS is not a perfect system. In general, BBS will even make more losing than winning trades, meaning that there is ample opportunity to make a few more winning trades, and because of the compounding profit system we use, it can eventually give you much higher profit compared to full autopilot trading. But it should be clear that interfering with the system may also give less good results, especially if you are missing out some of the larger profit cycles. You must synchronize with BBS all the time. To support you as much as possible, I will add some extra indicators that will help you make the right decision more easy. First, we will look for help to accurately identify short-term turning points. Among the existing indicators that could be used for this kind of indication are the RSI and the stochastic oscillator. They turn around fast and generally move fast to the opposite side. For the medium term, we will use the price stochastic oscillator and a smoothed stochastic inverse Fisher transform, or SSIFT. The stochastic oscillator is a momentum indicator that looks at support and resistance levels. Dr. George Lane promoted these indicators in the 1950s. The term stochastic refers to the location of the current price in relation to its price over a period of time. This method predicts price turning points by comparing the closing price of a security to its price range. The Relative Strength Index was developed by G. Wallace Wilder. The RSI is a momentum indicator that compares the magnitude of recent gains to recent losses. In this chart you can see how the stochastic RSI oscillator accurately marks short-term tops and bottoms. This is the main purpose of this oscillator, giving short-term entry and exit signals. SRSI will help you if you want to take a short-term profit to get you back into the medium term on the next short-term reversal. Clearly, we need another indicator to tell us if we are still in a medium-term up or downtrend, or should we expect a reversal. Look at the chart for the gray dashed lines and see how SRSI breaking above the 10 level are nice short-term early buying signals, while SRSI falling below the 90 level are early short-term sell signals. Here we are adding a standard 30-period stochastic oscillator with a K-factor slowing value of 5. Using reference levels at 15 and 85, you can see that turning points, the vertical red dashed lines, are logically a bit slower than the SRSI, the vertical gray dashed lines. In March, the entry and exit are confirmed by both oscillators. The entry with a bottom and the exit end of March with a top. The entry signal in April from SRSI is confirmed beginning of May by the price stochastics oscillator. The bottom beginning of June of the SRSI is an entry opportunity if you missed the one before. The price stochastics is not bottoming and the closing price remains above the support of the gap beginning of May. Beginning of July we get a down turning point in both oscillators. Is this the time to take profit? Yes, you could take profit here. Still, by the end of July there is a slightly higher top. This one shows more the characteristic of a medium turning point. You can see higher tops in price with lower tops in the price stochastic, and negative divergence announcing a more important turning point. Also from April till the end of July we have a nice 5 impulse Elliott wave up. By the way, with the up turning point half of July of the SRSI, you could predict the new higher top with the hidden divergence between the price with higher bottoms and the lower bottoms in the SRSI. This kind of hidden divergence typically signals a continuation of the previous trend. In the same sub-window of the stochastic oscillator I am adding a smooth stochastic inverse Fisher transform. This indicator is an almost digital stochastic signal for easy recognition of turning points. Here I made it fast reacting for the short term. You can use a fast indicator like in the previous chart or use a slower one like shown in this chart. Now for your information, let's have a look at this chart from the technical analysis point of view with the help of my book Capturing Profit with Technical Analysis. You would open a long trade end of April, the green up arrow, and close it end of July, the red down arrow. Let me explain you why. By the end of April you have a completed 5 impulse Elliott wave down. We have lower bottoms 3 and 5 in price compared to higher bottoms in the stochastic RSI, a positive price reversal indication. The SRSI is moving up from below. The slow price stochastic is oversold. The SSIFT is at 0 level, meaning the next turn will be upwards. The 3 candles at the beginning point are a morning star reversal pattern. We have a lot of good technical reasons why we should open a long position at the green arrow. A few bars later, price gaps up, making the top of wave 1, reacting down for wave 2 to the support of the low side of the previous gap. Wave 3 is started from this support and a low in SRSI, followed by an up move of SSIFT. The top of wave 1 is broken, but finds resistance at the level of a gap from the beginning of April. A correction down follows for the reaction of correction wave 4. Wave 4 finds support at the previous resistance of wave 1 and starts a last upturn for wave 5. This upturn is confirmed by a hidden divergence with higher bottoms in price and lower bottoms in the SRSI, indicating a continuation of the previous uptrend. The end of the uptrend is announced by breaking the last most accelerating uptrend line, falling through the support line of the top of wave 3, SRSI turning down, the slow price stochastic turning down, and a negative divergence between the higher tops 3 and 5 and lower tops in the slow stochastic. That means time to close the long position and at the level of the red arrow. What we are missing now to complete our template is the BBS band and related long-term average. And of course a digital BBS indicator would be nice. This chart shows the complete template. I added much used averages like the 50, the dashed blue line, the 100, the dashed green line, and the 200, the dashed red line, days average. These averages are traditional important dynamic support and resistance levels for the price action. The BBS is green and red with blue for the BBS long-term average. The BBS indicator in the bottom inner window moves between -1, 0 and 1. At level 0 there is no open position. From 0 to 1 or from -1 to 1 is a signal to open a long position. From 1 to 0 or 1 to -1 is a close long signal. From 0 to -1 or from 1 to -1 is a signal to open a short trade. From -1 to 1 is a close short trade signal. These rules will help you to decide going for an early buy or sell. For more detailed information about the used technical analysis technique, please consult my book Capturing Profit with Technical Analysis. Let's look at the rules for opening a long position. Of course, the more rules comply, the more chance for a reversal. Price reverses with a higher bottom in a downtrend. The SRSI indicator turns up from low levels. The SRSI indicator is showing a positive divergence with price. Price is moving up from the low side of the BBS band. The slow stochastic indicator is turning up from low levels. Price reached a support level. This support is given by the 100 and 200 simple moving average, a support line, a gap or the lower side of a trend channel or pitchfork. Price breaks through the last possible downtrend line. There is a rising breakout or continuation gap. Price reached a Fibonacci target level or retracement level. A clear, complete Elliott wave count is visible. A price reversal or continuation pattern is visible in the price chart. A reversal candlestick pattern is visible at the last pivot low. And BBS gives a buy long signal. Let's talk about closing a long position And of course, the more rules that apply, the more chance for a reversal. Price reverses with a lower top in the uptrend. Look at 1. 2 shows the SRSI indicator turns down from high levels. 3. The SRSI indicator is showing a negative divergence with price. 4. Price is moving down from the upper side of the BBS band. 5. The slow stochastic indicator is turning down from high levels. 6. Price reached a resistance level. This resistance is given by the 100 and 200 day simple moving average, a resistance line, a gap or the upper side of a trend channel or a pitchfork. 7. Price falls through the last possible uptrend line. 8. There is a falling breakout or continuation gap. 9. Price reached a Fibonacci target or retracement level. 10. A clear, complete Elliott wave count is visible. 11. A price reversal or continuation pattern is visible in the price chart, an up wedge pattern here. 12. A reversal candlestick pattern is visible at the last pivot high, here an evening doji star. 13. BBS gives a close long signal. An effective money management method that we apply with BBS is to select a limited number of stocks and distribute the available starting capital evenly among these stocks. Assume a starting capital of $25,000. We could divide this money over 20 stocks, each of which gets a starting capital of $1,250. Each of the 20 stocks is traded individually with no profit or loss sharing. All profit or losses are attributed to the individual stock. This means, of course, that each stock must be followed individually for knowing how much capital is available for the next trade. But applying this kind of money management has a number of advantages. With a starting capital of $25,000, a spread between 20 stocks, each with $1,250, the total loss of one stock creates a loss of only 5% in the total portfolio and less as the portfolio grows. A stock doing well will generate maximum profit, thereby reinvesting all profits for its own benefit. A stock producing bad results will have less and less capital to spend, thereby limiting losses when things continue to go the wrong way. The profits of a stock doing well are not lost invested in stocks not doing that well. Purely performing stocks will be recognized more quickly, which means that they can eventually be replaced much faster. In the worst case scenario, these stocks will not be in the race anymore because there is no more capital left. Spreading the capital among a sufficient number of stocks will improve the end result because some stocks will be doing much better than the average. The BBS Band Break System formulas are available in a separate confidential document. The Band Break System BBS is not sold. Rather, formula copies in any existing or future programming language for BBS, SSIFT and the BBS indicator are licensed only for a single non-commercial use. That means that any professional, commercial, single or multi-user license must form part of a written contract with the author and copyright holder. Thank you for your attention. Go to stoccato.org for more information or contact me at sve.vervoort@scarlet.be. Have a nice day.